Good morning. I'm Catherine Ross, and I'm here with Jim Cramer. We are both practicing social distancing, so I'm here from my home, and Jim is joining via Skype. Jim, before I ask you what's top of mind for you,
I'm trying to get our guys trying to buy. Right, it is a very crucial level, and so I'm sorry to be rude, but I'm back and forth with Jeff and Zeb, we put some money to work. Obviously, the people who are subscribers to Action Alerts are getting these emails right now, trying to buy a third stock. So why don't you subscribe instead of just freeload, and you'll find out what we're doing. Go ahead.
So before I ask you what's top of mind for you this morning, I do want to ask you, what have you had to do to make changes to adapt to the coronavirus and its impact on us?
That's a great question. Okay, so here's some of the things that we've done. I'm separated from my wife and my kids. They're going to the beach house. Fortunate to have a beach house. Didn't mean to drop that. I'm staying in New Jersey. I think it's just difficult. Dr. Fauci has mentioned over and over again. He's talked about callow youth and how they're invincible and immortal. And the rest of us, like someone like me, are exposed and at risk. So we're practicing that. I wear gloves the moment I'm finished here. That may not be enough. I Clorox everything. We love that stock for Action Alerts. I try not to be down. I try to read history during this period. I'm reading a combination of history and novels. The novels just to distract me, and the history to remind me. Right now, I'm reading about Leningrad because there are 750,000 people died of starvation. I like to always put things a little bit in perspective about how bad we are now. Something has been sorely lacking for some of the hedge fund managers who come on air in what I regard as ill-advised and suboptimal thinking. I also, I'd say, at all times are very wary and ask people if they give me anything or are about to mic me up. When did you last Purell, or when did you last wash your hands, or are those gloves dirty? I'm trying to have a limited number of people I interact with. And then yesterday, CNBC built a very nice home office that I think is a little like this. So I can use in the event that things really get shut down. I see you're at home. So those are the changes I've made. The changes are depressing. I'm not yet at the stage where we're in the underground sleeping because the Germans are bombing us. But I do not have I'm a little unmoored like everybody else. I'm a routine-oriented person, and I don't feel like my routine is helping me here. But I have to.
You and I are two of the same when it comes to that. It's very different.
Where are you, at home?
I am at home. I am working from my apartment. I had to kick my cats out of the room because they tried to make an appearance in my morning meeting. So Jim, what's top of mind for you this morning, besides for how you're coping with the coronavirus's impact on your life?
Sure. Let me see. I'm telling you, I'm so tempted to buy this ATT for the Charitable Trust. Yield 6.5. It's down 1. Okay. I'm a big fan of the SP Oscillator. And the SP Oscillator is what I regard as being one of my totems. And yesterday, it went to the highest ever, minus 24, eclipsing the minus 23 and change of the 1987 crash. And that gave me pause to think that even if you don't like the market, you may have to wait, because if it could bounce in 87, it could bounce now. What you're up against, obviously, is say a very big bankruptcy filing. That's certainly a possibility. Boeing would be someone I would think that might have to if they don't get some sort of credit line. And you're up against what I regard as going to be a tenfold increase in the number of infections, maybe even more. So you have to steel yourself if you buy. But when the oscillator is the most negative ever, it behooves me to say, you know what? You got to stop selling. You have to buy. Yesterday was a day that we bought right into the close for Action Alerts, and I think that right now we should buy, expecting a bounce because of the oscillator. I don't really have any hat to hang on, but I know that we were down 500. I think that there seemed like some definite some option pressure, some oil pressure, some pressure, headline pressure, some hedge fund pressure that brought the market down at the opening. And then we have the snapback rally. And what I like is that we did a kind of a nice retest, and it is my opinion that the oscillator is now in control, and that
Jim,
means you should be a buyer.
when you talk about the oscillator, let's take this from the approach of an investor who's just tuning in for the first time. What is
Sure.
the oscillator that you're referring to, and why is it
Oh,
why
that's a
do you
great
prefer it?
That's a great question. By the way, I mean, just so we know, this if the technicians might regard this as a successful retest right here, I think that's important. I'm waiting to hear what the VIX says. But the oscillator was something that my that Karen Cramer said to me that what you have to do is you have to find some gauge that measures whether people are too negative. And a lot of people use the VIX. That's kind of a convoluted thing. I use the oscillator because what it says is they'll just keep pounding and pounding and pounding. And it's obvious at a certain point that it's artificial. Artificial meaning that people are selling because they have to, not because they want to. They're selling companies. Like I'm looking at Dave and Buster's right here. Dave and Buster's is the kind of thing people just say, if volatility just got to hold it. It's at $4. Can they make it? Look, at $4, I don't know if they can make it or not, but who the hell cares? Why not take the lottery ticket? I'm seeing a lot of lottery tickets right now. Look at this, Ventas. He's up 24%. Now, see, that's a lottery ticket that worked out. So when you get to, Uber was a lottery ticket. Now, these are the reason why these are really important. Uber is up 30%, is because you need to look for lottery tickets when they're oversold. And this is going to be a theme, perhaps for the top of Mad Money, because the need for lottery tickets is the most important thing you can do right now to tide yourself over short term. And there's tons of them. And Uber being just a typical example. I mean, if you bought Uber, there was someone in the lightning round last night talked about how they wanted to buy Uber, and I said, well, you know what? I would actually high grade my portfolio, and that meant that I screwed it up. I mean, I could have bought Uber at 15 and change, and now it's at 19. So we're in that moment where the oscillator is saying there was too much selling pressure. Let the selling pressure end like the steam pipe. Buy some things that are compressed coil springs, but then sell them because we're clearly not out of the woods. And then when you sell them, you have to roll back into a J&J or a Bristol Myers, which are down because they're the things you buy when things are okay. I mean, when things are like okay, meaning not great, not bad. I'm also on the lookout for some news from the FDA. I mean, maybe they've got something. There's certainly enough news out there that could indicate, for instance, we were supposed to hear on remdesivir, on the Gilead drug, we were supposed to hear how it's done by the last week of March. What do we got here today? March 19. So I guess we still have like another 4 days, but I do expect to hear it from Gilead. There have been some people who thought it was going to be early March. Yesterday we got the negative news on the AbbVie drug. AbbVie's down, and that's silly. The drug was never going to be important. Okay. Constant check of everything involving COVID. It's my COVID thing with my watch. So yeah, look for things that are really oversold because we are oversold, and buy the lottery ticket, but don't get wed.
Jim, this next question I'm going to ask, I ask with a very heavy heart, but I do think that it's very relevant in today's world that we're living in currently, and that is, should you be paying more attention to your portfolio losses when the reality is you may not have a job tomorrow?
Well, you have to count on what I think is a very amorphous words from the president about that everyone is going to be protected. The pecking order, I think, should be healthcare workers. They have to be sure they're being paid, compensated for their time. The government should do that wherever it is. Even state government's going to run out of money. So the federal government would be great if they just stepped in and say, listen, everyone who's in the healthcare, you have unlimited resources. We're going to do this like it's the Manhattan Project. And then we have to protect the working person. And the federal government's got these plans. I wish they were more specific. But until they are more specific, then I think there's going to be a tremendous amount of fear. And we got to deal with that. And we got to get over this fat cat notion that what we need is a payroll tax cut. The people who have been blown out, W-4 and 1099 people, they're not helped by that. I mean, that's just another thing where the rich get richer. We know that what went wrong, one of the things that went wrong in the Great Recession is we rewarded reckless behavior. Now, it's certainly not reckless if you had owned a chain of restaurants because you didn't predict on COVID. But I also, God love you. I think you're terrific. You're probably rich, and you have to think about who's not rich. We're a society that tends not to want to make those determinations, but we do make them in retrospect all the time. And we do 2020 analysis saying, why didn't we just help the wealthy? Why did we just help? Why did we help the wealthy? Why didn't we help everyone? So let's start from what we've done wrong and get that money in people's pockets. But again, amorphous analysis does not work.
If you have been laid off, Jim, what should you do with those investments that you have?
You have to. This is another worry that my writing partner Matt Horween talks about, which is that you have to liquidate, and there's no choice. You have to liquidate. I mean, look, I think that they should forgive the student. Already the student loan interest should have been forgiven. I mean, just forget that. I mean, already there should be forbearance, or every individual should be able to apply via the IRS to be able to get the something right now. It's just a lifeline, so that they don't have to tap their savings. But most people don't even have savings. We need to see people in government who are not that wealthy, who say, look, this is the drill. We need to help this. We need to help that. And if we did that, excuse me, doing trade and national arts, if we did that, then I feel so much better. So much better.
We got the news last night that the NYSE starting Monday will be going electronic. You and I have had multiple conversations about where we normally host the show and how important it is to have that human touch. So in this age of electronic trading, how important is it to have humans still trading?
Well, I guess obviously it isn't. I mean, that's, if they have the capacity to be all machine, then when this is over, I imagine they could easily say, listen, it worked all machine. It's like what JP Morgan closed 1,000 branches, and it may turn out, if it doesn't impact their business, they'll keep those closed. I think a lot of people have been putting together a stay-at-home economy idea, because just in case this thing doesn't end soon. And I think that people realizing that they can come to the office far less. If you want to have a lower carbon footprint, what do? Okay, well, you just say, you know what? This Zoom really worked, and WebEx from Cisco really worked. So we're going to cut our carbon footprint by having so you don't drive to work. So I think that there are a lot of people, by the way, in a very ethereal way, or understanding, who believe that that COVID is the planet's response to what we've done to it. Actually, talking about that a lot, and I think that we're going to come out on the other side, and we're going to be very, very different. And New York Stock Exchange is emblematic. If people can work at home, we would just cut back carbon use gigantically. It's going to be a very big theme. Has to be. I'm writing it down so I have it later.
Kind of like Mother Nature hits back with the COVID-19 is kind of what you just said, right?
Yeah, I mean, it's a little ethereal. But I think, it's just as ethereal as the Book of Revelations that is being the subtext of a lot of these hedge fund managers come on air.
Yeah. Jim, I do have a Twitter question for you today, and I think that this is something that I'm seeing pop up a lot more. So Will asks, how do you find out if the company that you're looking to invest in is using leveraged loans or if it can survive a recession?
Well, I mean, you have to understand, you have to look at the balance sheet. And I think it's really important that, and by the way, it's not easy. I'm not saying that it's, come on, how come you not look at the balance sheet? But the problem with a lot of what we're trying to do in the club is try to explain exactly that. You have to look at the balance sheet. Here's what we see. When we did our conference call, you want everyone to go listen to the conference call, sign up and go listen. What we did was we talked about which of the companies that are uniquely not capable of handling this, dealing from the balance sheet perspective. And so I'm not saying that you can't figure out yourself. I am saying that we do the work for you for the recommended list, and so we're the best source you're going to get.
Jim, thank you for joining us today. And guys, of course, please head on over to twitter.com to send us more questions. You can tweet us at TheStreet or at by Catherine Ross. And now we are heading over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com. Jim and I are going to break down what you need to know, and he's going to give us a recap of what investors saw yesterday during the exclusive monthly members only call. I'm Catherine Ross, and we'll see you tomorrow. Please stay safe out there.